let's pick up now with the discussion. Tobias, you skipped your introductory slide for this, so just give us. Let's start with you, and then we'll go around the whole panel. Just give us a very brief kind of 30 seconds who you are and what you do.
Well, yes, I'm the head of research at GARBE Industrial Real Estate. GARBE Industrial Real Estate is a full implemented logistics real estate platform with a business unit developing logistics real estate, fund management and asset management and property management. And we have several offices in Germany as well in London. We have subsidiaries in the Netherlands and Eastern Europe. And well, I skipped the slide, but because we're pretty proud of what we achieved in the last years. And next week there's coming, there will be published a study that we achieved rank 1 of the investment volume in Germany. So that's the kind we do.
Great, thanks very much. Let's pick up with you, Ben. Just a quick introduction.
Yeah, hi, good afternoon. Ben Bannatyne. I am the European President for Prologis. Prologis is a global developer, investor, owner, manager of industrial real estate. We have approximately $135 billion of assets under management globally. And that translates into about 18 million square meters in Europe, across 12 countries and across 787 buildings.
Brilliant, thanks very much. Otis.
May I unmute? Hopefully you guys can hear me. Hi, my name is Otis Spencer. Good to see you, Ben. I'm the Chief Investment Officer for P3 Logistics. P3 Logistics is a privately held long-term investor developer of institutional quality properties across Europe. We currently manage about 5.4 million square meters of logistics space across 11 countries. We have a sizable land bank ready for immediate development, and we're actively pursuing investment opportunities across Europe out there in this very interesting asset class.
Great, thanks very much. Ingo.
Yes, thank you, Rich. My name is Ingo. Since 14 years, I'm running the business here for GLP, formerly known as Gaisley. We are nearby the same size like Ben, Prologis. We have an Asian background. GLP took us over at the end of 2017. Here in Germany, I'm heading the team in the Benelux, and in Germany, we are the top developer for Amazon. We have delivered millions of square meters to the top clients here of the German industry bases like Adidas, Volkswagen, Mercedes, you name it.
Okay, super. Thanks very much. Robert.
So my name is Dobrzycki. I am CEO of Panattoni in Europe. Panattoni is a US-based development company, industrial development company, with annual volumes more or less 2.5 to 5 million. Well, 5 million globally, 2.5 million square meters annually developed in Europe. So we are in most of the countries in Europe, and I'm running Europe.
Excellent. So, I mean, we're a great panel here representing a huge amount of space, particularly in the European side, but also globally. Let's maybe start with you, Ben. I mean, I mentioned in the previous panel just what an extraordinary period it's been. I guess, how do you see that? There's obviously, logistics came to the fore at the beginning, I suppose, in a way because of the challenges, particularly if I'm looking at the UK. But anyway, the challenges of being able to deliver food and supplies, so just supply chains come under challenges here. But I guess how do you see that period of the market, the current period of the market, the changes that you've seen? I mean, for me, it's extraordinary. Is it the same for you?
Yeah, absolutely. So clearly, I guess April, May was a bit more challenging to the extent that none of us really knew what was happening. But as of today, it's almost back to business as usual. Our portfolio certainly, and the same I think with most of our colleagues is we are sort of 96.5% occupied. So right across Europe, most of our customers are back into some sort of stability or indeed growth mode. And as mentioned by Tobias earlier, I mean, clearly there are sectors that are benefiting and there are sectors that are struggling. So if you're in the hospitality sector or if you're in the airline industry, then clearly not great. Automotive was down, but is picking back up very quickly. And we're actually seeing a lot of demand back in Central Europe from the automotive sectors. But then you switch to e-commerce and even traditional retail for certain retailers is really picking back up. But e-commerce clearly is the driver for most of us in terms of additional volumes of demand. So we're very comfortable where we are today. Our customers are in good shape. Clearly a bit of a blip at the beginning in terms of rent collection. That's back to normal levels. As people have seen that business is coming back to normal. So I think overall in really good shape. And, you know, thankfully, the development machine has also remained in check. So the supply side is still under control. Demand side is stable, if not growing. So I think we're all in a pretty good place.
Okay, interesting. Thanks, Ben. And Robert, just coming to you, just to pick up that point from Ben there, I think that's interesting about the particularly the development side and the supply side being in check, because I remember sort of not long after the previous crisis, there being a lot of discussions around there being too much supply. How was that going to be used up? Do you see that position as well? How do you see that development side? Do you think there's going to be more of a pause, or do you think actually that there's going to be more supply coming online because of the growth of e-commerce?
Well, yeah, I mean, most of the supply that we provide is for the customers. So most of the buildings we build are built to suit business and driven by mostly e-commerce. So even in this case, it's not the easiest task to deliver buildings these days. I mean, occupiers, tenants are forcing us to go closer to the population centers, and it's obviously more and more difficult to develop in these places. So generally speaking, I mean, there is not so much speculative development going on. Most of it is pre-let, based on a pre-let, and clearly speculative finance. It's still not the easiest thing to get. So that's also kind of a limiting factor and helping to balance the market supply-wise. So the supply is needed because the market is growing, and I mean, e-commerce players are pushing for supply, but this is kind of demand-driven, not much speculative.
Okay, good. And I just wanted to pick up with you, Otis. In you know, we've seen there from Ben also that there's you know, from his perspective, things have kind of returned to some form of normal, at least in terms of those things. What do you expect to be the lasting trends coming from this crisis, Otis? I mean, do you think we will see more onshoring because of the issues that the challenges with supply chains that there were, and also picking up that point from Sean's presentation where, you know, people are looking to do more things locally. What's your sense of that? Do you think that will be one of the lasting trends?
Most definitely. I'd say the trend that we've seen, the acceleration of e-commerce, that's definitely one theme that we're following and trying to capitalize on. But the whole concept of supply chain disruption and the push towards onshoring, we think it's going to help several of the markets what we're active in as people look at how best to optimize supply chain. So we're looking at what role we can play in that in terms of the build-to-suits, whether that's for production-oriented customers, or looking at just the you know, food, pharma, all those other aspects where people definitely want their product closer. And so we're looking at the best way that we can be an efficient provider of space for those customers.
Okay, good. And Tobias, just picking up with you, in terms of some of the sort of tech things that we saw from Sean's presentation there, a lot about robotics, also things that I hadn't really imagined, like floating hubs in the air or underwater, for example. But he also mentioned things like, that there were already, driverless lorries working, that you'd got a lot of these things. How many of these technological kind of innovations do you see as reality, and how many of those are coming in at the moment? What should we expect?
I think some of the innovations will stay a little bit science fiction, but for many, I think that's, the technology is there. It could work, but the restriction I see, especially here in Germany, are more of a legal side. Legal restrictions, bureaucracy. For example, if you think about subterranean tunnels, delivering parcels into the city center, it would be a solution to many problems we are facing in the cities. But if you think about how difficult every work is underground, and how expensive and investment intensive, and how long it would take, I think it will take some time to really take effect. For example, if you think about drones, there are several companies in Germany, as well as the major players, Amazon, etc. They are testing drones to deliver parcels, and the technology is there. But if you think about the regulations, I can't imagine a whole swarm of flying drones together with a whole swarm of ground-bound drones delivering parcels. It would be, well, I'd like to see me corrected, and maybe we'll be a few years from now in another webcast session, and we say, well, it's really there, it's working. But I think we have to, we need a solution about a new mindset, a new regulation scheme, a new legal boundaries, then it could work. But especially in Germany, it will take some time. In other countries, I can see that it will move faster. For example, Hyperloop and similar systems can be introduced in other countries very fast, whereas in Germany it's difficult. In other countries, I can see that Hyperloop and similar systems can. Okay.
Hello.
That's what I'm talking about. Glass fiber and fast internet. It's still a problem. So we have to get a solution for this at first, before we can think about underground distribution system.
Yes, Tobias, you're absolutely right.
No, I think that's interesting. And in terms of your view, Ingo, just, I mean, this is more about the general trend in a way. I mean, consumer habits have been forced to be changed, certainly in terms of e-commerce, but that includes things like food retail and those kinds of things. And I remember there being discussions around Germany where, people would not be interested in using e-commerce in terms of food retail. So how are you seeing that? Do you think these were changes that were enforced and will go back at some point? Or do you see this as an acceleration of a trend, and these things are here to stay?
Richard, that's a very good question. As you know, as a developer, you need to have a mindset that you are always very optimistic about everything. But I think on food distribution, if you look especially at the German situation, when you get out of your house or your flat, you have in a circle of 400 meters, you have Edeka, you have Real, you have Metro. You can buy everything super fresh. And if you don't want to stay 24 hours in your home, it's good to have a walk with your dog to the next food retailer to buy your fresh food. I think from that point of view, you don't see that much food retailing e-commerce wise in Germany, and the trend is slow growing, but not like we see in other stuff in goods like which are in the normal e-fulfillment centers, sorter centers, or last mile logistics center. So we need to look at it. Maybe cold storage warehouses are something we need to look at this as well, but that is, from my perspective, still a tenant fit out, a special tenant fit out, and not the normal standard.
Okay, good. I wanted to pick up a little bit on some of the challenges. I mean, Ben, in terms of your view, obviously we've had this period where logistics has supplied a lot of people, and you're saying that those are coming back. But do you see challenges therefore on the horizon if we do get a sort of severe economic recession off the back of this? Do you think that will have an impact, or what's your sense of that?
I mean, clearly demand for our product is driven by consumption, and therefore if there's a very deep recession and consumption slows down, that's obviously going to have a negative impact. But everything we see so far, and we've certainly dialed down our forecast, let's say, for the coming 12 to 18 months. So we are assuming there will be a softening. But we don't see, people still buy food, people still buy basic products. Products will continue to flow through the supply chain and ultimately through our platform and our warehouses. So we're not expecting any significant slowdown. And the growth of e-commerce really is, it's 2.5, 3 times more space than bricks and mortar retail. So just by that growing, that continues to, I believe, keep the occupancy levels up. So we're very, very focused at the consumer end. And at that end, I think demand is going to stay strong. We may see occupancy slip, but it's going to slip from a record high. So it's not anything that we are overly concerned about. And indeed, the customers we're talking to, all have a very healthy pipeline, either for their own products or the 3PLs with their end customers are all in growth mode again. So as I said before, I think the outlook looks good for Europe. Clearly, there will be some bumps, and we don't know what's going to happen when the furlough schemes, for example, in the UK come to an end. The French have been extremely proactive in terms of supporting employees. But there may be a silver lining again, because whilst we don't want to see higher unemployment, the biggest issue facing our customers for the last 24 months has been a shortage of labour. And therefore, if there is a new pool of available labour into the market, that's certainly going to benefit our customers in the industrial and logistics sector.
Oh, that's interesting. Thanks, Ben. And Robert, from your point of view, I mean, Ben mentioned there that there's going to be, just the amount of space required by e-commerce is huge. What's your sense of that in terms of the supply that there is, and are there particular hotspots around Europe where you think there's more opportunity than others in terms of that supply and demand equation?
Well, yes, definitely. Western European countries are presenting great opportunities in terms of obviously e-commerce penetration and lack of space for e-commerce customers. So there is definitely a big wave of, from our standpoint, development to be delivered in Western European countries. Clearly, the whole network has to be built from scratch. I mean, e-commerce network. And in many cases, you can't fit these requirements in existing buildings. They are, in many cases, quite specific developments. For large customers, they have a different pattern, and obviously they are looking for combination of being close to the consumption base and labor pool. So sometimes the pattern is not exactly matching existing space. That's why there is a need to develop new premises, and obviously there is a huge demand even during COVID that we see, and we try to satisfy. So that's definitely the case. In Central Europe, you have production which slowed down during COVID, but we are seeing recovery right now, and customers are coming back and requesting from us developments in the western parts of Central Europe to supply to kind of deliver to Western European countries, and the same with the large e-commerce customers. I mean, sometimes they can't find enough space, or they can't find developments within some period of time, and they end up locating themselves in Poland or Czech Republic, which we also try to capitalize on. So very dynamic environment, a lot of work in Central Europe, Western Europe, but clearly consumption, e-commerce, and serving customers from that standpoint of view will be a big theme for us going forward.
Okay, good. I wanted to pick up, just pick up with you, Ingo, if I can. I mean, there was an interesting point in Sean's presentation, and it came up a little bit actually in the capital flows panel that we had, which was also around that idea of repurposing. And in Sean's presentation, he was talking about in the US, Amazon buying up JC Penney's and some of those retail areas that essentially are no longer used for retail, and that maybe that's an opportunity for logistics. What's your sense of that? Is there a similar opportunity in Europe for kind of repurposing some of these buildings that are maybe closer in to urban centres for last mile?
I personally, I think so. That if we are going closer to the city center, to the high streets, that there are a lot of areas like the first floor, the second floor, the third floor, in the first floor of a big shopping mall, for example, could be excellent located for the last mile logistics tasks, the e-commerce facilities. We need to look at the restriction because there will be a lot of traffic. We need to look at the door situation, how you can get the boxes and all the parcels then on trucks or something like that. But I think focusing on the last mile, and that is, I think, the competition between the e-commerce companies, to be faster and faster. Every day is a new day to get faster the goods to the consumers. I think that is a general trend. Any e-commerce developer or logistic developer should look at. Not the main business, it's still that we are looking at, from GLP point of view, on sorter center, e-fulfillment center, we have a big market share there. But we need to look at that kind of stuff for sure, yes.
Okay, good. And Otis, I just wanted to pick up that sort of e-commerce point that we've been talking about. I mean, prior to the crisis, e-commerce penetration varied across Europe. Do you see this as broadly equalising now? Do you expect big differences to remain in the market? So in that sense, do you see the crisis as a leveller or an accelerator in terms of that demand?
I would say it's definitely an accelerator. We've been very active in Germany, for example, with e-commerce related customers and looking to fulfill what their needs are. But we're seeing e-commerce expansion, whether it's in Spain, Italy, in Central Europe. There's definitely a big push in that area. And I just want to bring that back to your other point you mentioned about repurposing. Because we are also spending a lot of time looking for opportunities, because for us it all starts with the location. Is that a prime location, secondary location? What's the quality of that location? And with the scarcity of land available for new greenfield developments close to urban areas, it's really helped us to look at opportunities of either brownfield sites or acquiring assets that may have another use, which is not currently logistics, and then look at repurposing that, coming up with a business plan to see how it fits, because we think a lot of these e-commerce customers, they will adapt to the space. There's such a demand on them to satisfy their customers. They want to get as close as possible and fulfill their customers' expectations.
Okay, good. I just wanted to pick up one thing. Thanks very much for the question, Andre. Specific interest in logistics in Portugal. does anybody want to pick up either the, can be the general Iberian market, how you're seeing that, or the Portuguese market? But I've noticed that there's been quite a lot of deals in that area coming through the news lately. Does anybody want to pick up the Iberian side?
I will punt to Ben. We're not active there, so.
Ben, that's fallen to you.
We're also not active in Portugal. We are obviously active in Spain, but Portugal is not a market that we have entered, and we don't plan to for the foreseeable future. In terms of Spain, it's one of the softer markets for us at the moment across Europe. So it's where we have the lowest occupancy. We're in the low 90s. And we're only we really focused on Barcelona, Madrid, and lately Valencia. But Barcelona and Madrid being the two biggest markets, and Madrid is probably where we're seeing the most activity. But we're seeing the most activity from demand side, but also from the supply side. So there's been a huge amount of speculative space delivered into the Madrid market, particularly in the south of Madrid. So that's a bit of a headwind to rental growth. We just closed in a big portfolio, which we bought over phases in principally Madrid, and the last phase of that closes this month. So that will deliver another big chunk of space for us, which looks like will be leased, which is good news. So the market is strong. It's the one market, I would say, together with Poland, where the supply side has probably got ahead of the demand side. Which is not the same situation in the other 9 markets or 10 markets that we're active.
Okay, good. And this again is just for anybody really. So Andre, it looks as though at the moment, certainly from this panel, then Portugal is open to you. Let's just pick up a little bit on some of the kind of investment fundamentals. Let's start with you, Robert. Just in terms of rental, what are we expecting? Are we expecting rents to stay broadly the same? Are we expecting rental growth?
I guess there is no one picture for the whole European continent. I guess it depends on the sub-market, but generally, I would say stable with a pressure to increase.
Okay, good. And what's your view, Otis, on that side? Are you expecting to see rental growth?
We definitely are anticipating rental growth in certain markets, but I think if you generalize across the 11 countries that we're active in, we expect rents to be fairly flat for next year, as there's the supply-demand imbalance. But what we're really looking at is yields, and the expectation is that yields will continue to compress across the board as the weight of capital is looking for opportunities in this space. And so what we've been quite active in Germany lately, and so in Germany there's not a massive amount of rental growth, but we've definitely seen the yields compress in that particular market.
Oh, that's interesting. And have you seen that? Did you want to pick that up, Ben? Feel free to.
Yeah, well, I was just going to say we dialed down our rent growth assumptions for sort of Q3, Q4, and 2021, but we're actually ramping them back up in a number of countries, and in particular, Germany is one where we continue to see strong rental growth. In most of the markets we're active in Germany, occupation is 99 to 100%. And when it comes to renewals, there's not many places for customers to go. So we are still seeing significant rental change, particularly in Germany, but right across Northern Europe.
Okay, good. And Ingo, I mean, there was mention there about the value side of it and the yield side of it. Obviously, Germany has been a very competitive market for a long time, but particularly there's been a lot of activity in comparison to other areas of Europe, particularly. What's your sense of that at the moment? Are you seeing, is the majority of that local capital, international capital? Who's buying? And I suppose, what's your kind of view for yields, particularly in the areas you're working in?
Yes, this is a very good question, Richard. We see, if you're looking back from 25 years, for example, there was only institutional capital coming from Anglo-Saxonian countries, no? Or from France, for example, looking at the asset class logistics. Now, in these days, we see that really European money is waking up. German money is waking up strongly. You see institutional money from Union, for example, which are the partner, I think, Tobias with GARBE, for example. They are really prepared to pay best prices in the market. You've heard today that one of the biggest portfolios is now under exclusivity with award, which is not very high. It's the net investment yield will be below 3.5. That is amazing. We have seen a product in Berlin, for example, which is under exclusivity as well, with a German capital partner, where we see on the actual rent, we see a yield of below 3%. So I think for Germany, I think these are good times. So we see yield compression plus rental growth. I have areas, then I can only add what you have already told, where we have seen in the last 10 years up to 75% rental growth. Because where should they go? Where is there when there is no warehouse available? So for asset managers like us, like Prologis, like P3, these are good times. And I would like to add one thing: what are the drivers and shakers and movers of this rental growth? You mentioned this in the beginning, this onshoring activities. Here in Germany, we are one of the leading export nations. We have a trade export of nearby 1.5 trillion euros. So what we cannot afford is that our supply chain is falling apart because of some virus activities going across. So what needs to be done? Well, coming back home, not all of that for sure, but some of these. And what we like as a logistic developer is always industrial production, because this needs logistic needs industry, for example. So it gets even better from my perspective. So the place to be, in a short summary, is at the moment North Europe, in particular Germany.
Okay, good. And we've all been very polite and you know, let one another speak, but we can now open this discussion up and just pick up on some of these points. I'm really keen also to pick up just in terms of some of the broader accelerators that we've seen elsewhere. I mean, there was a lot of discussion around ESG, picked up in a number of the discussions that we've already had this morning. And I've been seeing a lot of kind of positive work in terms of ESG, carbon neutral, those kinds of things happening. Is that something that's also being driven by the capital, by the occupiers, by the developer owners, asset managers? What's driving that? And I guess, is that going to be accelerated as well?
Well,
Yeah.
maybe I don't, yeah, sorry.
No, I think it's been driven by all of those, all the above. You know, clearly it's the right thing to do, but also our customers are demanding it, our investors are demanding it. I mean, our own employees are demanding it. So ESG is a major focus. And, you know, there's some simple things, obviously, like improving the specification of a building, upgrading old lighting to LED. So we've run a big program across the globe to upgrade to LED. We have a big solar program now across Europe. But in addition to that, it's, you know, again, around the labor question, around if you want to get closer to the consumer and be closer to urban areas, clearly that's difficult unless you're providing something for the community. So how does the building look? What additional amenities can you provide? How can you help your customers attract and retain labor? So these are all things I think that are coming under the ESG banner. And again, with employees, you know, and the whole COVID pandemic, clearly the working environment you're providing them for obviously needs to be safe, but in addition, needs to be more and more, let's say, healthy. So this well-being standard, or the well standard that we're starting to adopt. So upgrading office facilities, you know, fresh air, water stations. There's a whole load you can do to make the working environment more attractive and help our customers retain their employees.
Good. Tobias, you wanted to pick that up as well.
Well, yes, I totally agree with just what my colleagues just said. It's ESG is getting more and more important for us as well, not only because of the investors demanding it, but when you the present the pandemic situation we're facing right now, it's maybe there's a solution we have in the few years when there's a vaccine or it's something similar, but the global warming crisis will continue, and it is getting well, as you can see in some of the United States parts, like for example Florida or California right now, it's getting more costly. So to have insurances for major disasters like floodings or fires. So if we don't take this issue seriously, well, it will backfire on us. And, most of the stakeholders can see it already and demanding solutions. And also at GARBE, we thought how we can tackle this issue. And of course, if we build new properties, then we try to make them carbon dioxide optimized. But as you know already, we already think about, oh, there's so much old stock, and how can we refit it? Because they are already there. You don't have to emit further carbon dioxide to build it up. And another benefit of those properties, they tend to be more inside the cities or the near surroundings, whereas the newly built properties tend to be farther away because of the scarcity of land. And well, you could have the most efficient property, but if it's very far away, you have to drive more. And right now, the most lorries, well, I haven't seen any e-lorries, and I think it will take some time that most of the lorries will be driven electrically. And on the other side, the batteries have to be loaded in a environment-friendly kind of way. So for us, the stock already there is, if we can refit it with some LED lightings or some minor improvements, they will the life cycle can be extended pretty much, and those properties can be more environmental friendly than the new built property. So we are focusing on both sides to this solutions.
Okay.
But a quick question, Richard. I mean, does the panel see occupiers offering to pay more for sustainable buildings?
You asked me if our tenants pay more.
Are they willing to?
Well, it depends. It depends on what kind of tenant we're talking about. It's not only about the rent levels, but also are they allowed inside a supply chain? For example, if you are a tenant, an automotive supplier who wants to build for a Tesla, for example, you need to get some kind of, or you have to show that all your activity is most environmentally friendly. Or if you want to let me tell you another example. We have a new photovoltaic department who is trying to put up solar panels on every of our properties. And if you ask them, do you want to have photovoltaics on your roofs? They say, oh, they're great. So we can use the electrical energy to charge our not lorries, the what do you call it? Yeah, the forklifters, for examples. So you're right. It's more of a topic for investors, not for the tenants so far. But we see a shift here in how they think.
I would disagree, to be honest. I mean, certainly with the customers we're talking to, it's absolutely top of their minds. So, you know, yes, there's a number of customers who will continue to work the way they do, and they won't pay attention to it. But the majority of our customers, ESG is absolutely the forefront of what they're doing. And Otis, to your point, I think there is some additional expense, but if you can procure properly and plan ahead, actually putting a lot of this into the specification up front, it's not a significant increase to your normal development cost. And I do think tenants are prepared to pay that little bit extra, either through rent, or they will at least share with you the savings, for example, on what you can do with solar or LED. So your total NOI recoverable is probably the same. It's just maybe different from where you're getting it. At least that's the experience we're having in Europe.
Yeah, for new buildings, it's possible to do that, but going to the point about the repurposing, that makes it a bit more of a challenge with your cost base. So, okay.
Yeah, that's interesting. Robert, I just wanted to pick up quickly with you. I mean, we've talked a lot about maybe what demand might look like, those kinds of things. From a real estate perspective, do you think there'll be more diversification in terms of locations, smaller local hubs, more nearshoring? What are you having to look at in terms of, I suppose, what the customers are going to be looking for?
Well, the main theme that we see is obviously labor, and I mean it is caused by e-commerce expansion. E-commerce consumes much more labor, so e-commerce customers are trying to locate where the labor is available, and at the same time not to be too far from the customer base. So we see a big trend of opening new locations in all countries in Europe, and we try to follow this trend. So it's not only big cities anymore. It's mid-sized cities and smaller cities where you see availability of labor, but at the same time, if you have a city of 500,000 people and no space to let, there is something wrong, I guess, because obviously these people has to be served on a last mile basis, and you need to be close to the customer. So there's a huge potential for us going forward to serve locations which were not the biggest so far, not the main locations, but which also require space. And in almost all countries in Europe, we try to follow that, and it's quite successful. So this is crucial trend that we see. I mean, still in Europe, you have Central Europe and Western Europe kind of a border with the labor cost at a different level. So production and portions of e-commerce are still kind of looking for the savings, and also labor code differences are visible, not only Central Europe, Western Europe, but also within Western European countries. You have Spain, France, you have Germany, France, and there are on the borders, there are obviously quite substantial differences, labor code-wise, and pricing of labor too. So you have this also like going on. I mean, portions of France, e-commerce-wise, are being served from Spain. So this is also the case. But the biggest trend we see is labor and bringing buildings closer to the consumption, which in many cases is not only bigger cities, but also mid-sized and smaller cities.
Okay, interesting. We've only got a couple of minutes left. This seems to have gone past really incredibly fast. So let's just for those who are listening in and are watching and looking to find some sort of I guess insights on where the opportunities are, particularly in Europe. Let's just pick up on I guess where, given the situation at the moment, where you're seeing the opportunities, and let's stick with Europe for now in terms of the opportunities. Let's start with you, Otis. What's your view in terms of the opportunities in the current market?
Opportunities in the current market, In terms of the geography, we're really focused on Germany, the Netherlands, and France. And it's just not, as I said, we're an investor and not just a developer. So on the investment side, what we see is there's an opportunity for more sale and leasebacks. As this, say, slowdown kicks in, you're going to see more occupiers needing maybe to free up cash, and they'll do that by selling some mission critical assets. So it's an area that we're spending a lot of time at, is looking at covenant strength, how strong are those occupiers, and what the possibilities are for sale and leasebacks.
Great. Okay. Thanks very much. Tobias.
I think with still a huge demand surplus. So we have everywhere in Europe the possibility to create new developments. Of course, for investments, Germany is getting more and more expensive. But if you look outside of the top 7 markets, you might find still opportunities. Outside of Germany, we see many opportunities in the eastern parts of Europe, as well as in the Benelux and France. So from the demand side, it's a pretty good situation we're still facing. The major trends, of course, here it's driven by e-commerce, which is still going on, and some other trends. All in all, it's a pretty good situation we are right now in.
Okay, good. Robert, what are the opportunities?
Yeah, I mean, from our development standpoint, I mean, the biggest opportunity we see is to serve e-commerce customers in Western European markets where you need to kind of build the e-commerce retail from scratch. So this is going to be our focus going forward, and the volume, most of the volume that we would have business-wise.
Okay, great. Ingo.
Yes, Richard, I think for me, it's the takeaway is from that pandemic is that the key learnings is that the fact that the logistic properties are really the pillars of a systemically relevant infrastructure. We can now discuss with municipality how to create future-proof branch mixture, high-quality jobs. If you look at data centers and logistics services nearby, it's coming to a hybrid. You have software engineers, you have a lot of excellent skilled people, you have social sustainability, you have sustainable tax revenues. Everything needs to be future-proof. And that is a clear message to the municipalities, to the cities, how we can work with it. Not only delivering a big box, we are your settlement expert to make your destination future-proofed.
Okay, great. And last but not least, Ben.
I mean, obvious real estate opportunities right across Europe. I think the biggest opportunity for us is basically working closer with our customers, using our scale. And we've just launched actually Prologis Essentials Marketplace, which is effectively a digital platform where our customers can buy LED, solar, they can get forklifts, racking. So really all the products and services that can make it easier for our customers to focus on their core business and get up and running in a new facility as quickly as possible. So I think not just 4 walls and a roof, but there's a whole other business opportunity out there, with our customers globally and indeed right across our European platform.
Great. Thanks very much, Ben. Thank you, Tobias, Robert, Otis and Ingo. Really interesting discussion.